Hello and welcome to another update video about DOT. Nothing to see here, I could say. Is the two scenarios that we talked about in recent days, they are both still valid, even though obviously, as you know, the yellow count, which indicates a leading diagonal from the October lows, formed like this: wave 1, wave 2, wave 3, wave 4, wave 5. It's a bit ridiculous, this wave 4, so it's actually way too deep to be reliable. So I do not trust this scenario at all. Yeah, I do not trust this extremely deep fourth wave. I like to see normally, no wave 4 that goes beyond or below the 61.8 retracement level, and it did that. I have taken that level off the chart now because it was broken. We have recovered above it. I think it was around $6.20. The market has recovered above it. However, it still doesn't really have the right look unless we're dealing here with an expanding diagonal. That's of course valid. As I said, it's not an invalid wave count. It's here, but these are rare. Okay. These are rare, these expanding diagonals. I'm not saying it couldn't be one. I'm just saying it's not necessarily the highest probability count, okay? So we certainly do not have impulsive price action from the October lows. It could have become an impulse, okay? So I gave it the benefit of the doubt here. Okay, shallow wave 2, bit suspicious, but it reached the target of the third wave. But in the fourth, it lost its impulsive potential. Can't remember what exactly the level was that it broke that basically indicated something different is going on, but it was too deep to be reliable for an impulse. And certainly not impulsive. So we're dealing at best with a diagonal, which could form one more high in wave 5. If we see a wave 5, where should we expect a target? The way to measure that is to take the length of wave 3, go to the low of the wave, the length of wave 1, go to the low of the wave 2. And then, $10.90 is sort of the first main level to watch there, possibly up to $13.24. In that range, there is another way of measuring it, because we can take the length of waves 1 and 3, go to the low of the wave 4. But then again, if it goes a little lower, the fourth, then we have to reset that. But at the moment, if I measure against the last low, there's really good overlap between the 61.8 extension level and the 1.618 extension, around $11. So there's really good confluence, overlap basically between different Fibonacci levels. So that typically points towards some potentially strong resistance there, or a little bit of a magnet, that the price could act as a magnet or the level basically acts as a magnet and draws the price to it. We'll see. But that's just one scenario, this diagonal pattern. You now have all the targets for that. To be honest, to keep this scenario alive, I would really not want to see a break below the last swing low, which formed here on Tuesday at $5.99. It would just make it even less likely. Probabilities have already shifted towards the white count anyway. In the white count, the pattern is a little bit different, and we have 3 waves up in wave A. We have a 3-wave pullback, which I consider a B wave. It could still get another low, which would be ideal, to be honest. So if we get one more low, it would even further shift probabilities towards the white count. It would basically be ABC in an A wave, ABC in a B wave, and then we get a C wave up. That rather should go a little higher than a wave 5 in yellow. Here, we would rather look at possibly, it's a C wave, because this is a B wave pullback. We calculate the target by taking the length of waves, of the wave A, and we go to the low of the B wave. Again, if that goes a little lower, we have to adjust that. It's a bit of a moving target. But here, the 100% extension level, which will be key and which is one of the levels to watch for a C wave, takes us to $16. So this is actually, let's say, short-term, potentially more bullish than the yellow count, but it's also a count that is less certain, because it means that there will be a 3-wave top, and we cannot really trust a 3-wave top. So whatever happens then after that C wave, we will have to drive on site. So it's not that we can say now, okay, this or that should happen. After an ABC top, new bear market lows could happen. It could turn into a triangle. Very, very difficult. Very difficult. But that's at the moment what we can offer here, what we can deal with. And the support levels, should we form a low below Tuesday's low, then we've got support at $5.80. It's a very important level. There's also good confluence there. $5.30, $5.20, $5, $4.58, and below $4.39, I haven't got any reliable bullish support level left. Not in the yellow count and not in the white count. By the way, official invalidation for the yellow count is down here at $4.85 pretty much. That's the official invalidation, but I can tell you that already a break below the last low will make that yellow count very, very unlikely. It's already less likely now because the price broke this week briefly, even though it was only briefly, but below the 61.8 Fib level. Okay, that's my update about DOT. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.